Okay, I'm attempting to use this technology. I'm actually an idiot with technology, but hopefully thanks to Louis Camerasano over at Small Gold, shout out to Louis, I think I'm doing this right now. Let me know. Okay, guys. So I'm hearing myself. It sounds like it's working now, and we could do this we could do the short video. Okay, so the reason I'm doing this short video rather than Okay, so I'm doing this short video about Tesla Motors and the tweet that Elon Musk made yesterday. It is one of the most bizarre things I have ever seen or heard in finance, and I've been studying investing in finance for a very, very long time. Are you guys hearing the audio okay, or is it repeating itself? Okay, so I'll try to make my points quick since I'm clearly screwing up with the technology uses here. I tried a test recording, and it sounded like it was working. But anyways, first of all, this is not financial advice. This is my opinion only. And for full disclosure, I'm not short Tesla Motors. I've never been short Tesla Motors. I do have friends that are short Tesla Motors. But the tweet that Elon Musk sent out yesterday saying that he was going to take Tesla Motors private at $420 a share is, I've just never seen anything like it. And so let me share my experiences, because I've done a good amount of interviews with CEOs of publicly traded companies of all different sizes on American stock exchanges, on Canadian exchanges, in different industries as well, whether that's mining, oil and gas, some alternative energy ones, a few technology ones, some crypto ones here and there. And from my experiences, whether it's on or off the record with these CEOs of publicly traded companies, and I think, they've been coached very, very heavily by their very expensive corporate lawyers, they know not to do what Elon Musk did. So I think there was motive behind what Elon Musk did. And in my opinion, I think that motive was what Elon Musk did. I think he was pumping the crap out of his stock. And I think it was done intentional. And I think he thinks he can hide behind his lawyers. And it was to fry as many shorts as possible for a short squeeze. There's speculation that there was some convertible debentures, and that instead of taking cash, he wanted them to take shares at the higher stock price. But still, out of my experience, as you guys know, I've been doing a lot of interviews for a very, very long time now. And I've interviewed a good amount of publicly traded CEOs of publicly traded companies, and whether the CEOs are on the record, off the record, sometimes I've even at a few conferences here and there over the years, they've even been drunk. They will not talk and say the things that Elon Musk did about their stock price. They are very, 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 very careful. And so what Elon Musk did, there was purpose behind it. There was motive behind it. And this was to wipe out the shorts, in my opinion. So if you are a short Tesla Motors, I think, I'm not a lawyer. I did drop out of law school, but I'm not a lawyer. So this is not legal advice. But I think there will be a good case for you for suing Tesla Motors and Elon Musk because of what he did. It is really, really, I'm just amazed that, and you know what? The SEC is probably not going to do anything now. That's the scary and sad part. The SEC would rather go after a little company rather than Elon or a bigger company. This is the new normal that we live in. And, it's extremely, extremely frustrating because I'm not a short seller. I really have not done much shorting in my life. I think I bought a couple puts. That's about it. But I do have friends who are professional money managers, hedge fund guys, who risk their own money, who risk their clients' money for shorting. And I can tell you that, in this new normal that we have, where people are trying to short, they're up against basically a ton of legal and illegal pro stock market, pro bullish, like rules changes, basically financial fraud, enormous bias on the upside. And almost all the laws and the regulators, the central banks, everything is favoring stock prices higher, especially large companies. So there is an enormous amount of accounting fraud. And my friend Dave Kranzler put out a article yesterday, short one. It's a segment from his investment research dynamics short sellers journal about Tesla Motors. There's accounting fraud at Tesla. If you spoke to a lawyer, it would say technically it's not accounting fraud. And why is it not accounting fraud? Because they've disclosed in the footnote section all the things that they've done. So if you look through the financials, they made the financial statements look somewhat normal, but all the stuff that basically they're getting away with is almost all in the footnotes. And unfortunately, guys, especially if you're a short seller, you're up against basically, with the central banks pumping enormous trillions of dollars of money and credit into the system, you're up against basically accounting fraud and financial engineering, artificially cheap interest rates, which allow share buybacks with debt. And I could go on and on down the list of all the things if you're a short seller that you're up against, but you're up against basically legalized accounting fraud. And, Tesla Motors is blatant, but there's hundreds upon hundreds of examples of publicly traded companies, large caps, small caps, mid caps, that are getting away with this. And you know what? It's only going to get worse because there's routine financial engineering conferences for how to do stuff like this, how to bend the rules, how to get and all this stuff. If you're very sophisticated, you read the financials, you look at the footnotes, but this is just the new normal now. And so, like, to give examples of Elon Musk, like how bizarre his behavior was yesterday on Twitter. I mean, I've listened to many hundreds of conference calls of publicly traded companies of all different sizes and different industries. And the CEOs, the CFOs, all the upper executives are extremely, extremely careful about price targets on stocks. So normally what they will say is, oh, you can take a look at the research of this analyst, or, oh, that sounds about right, or the stock price should be higher, very general stuff. But for Elon to say $420 a share that we're going to take the company private out is just extremely unusual. And I think there's motive behind it and purpose behind it. So I don't know if anyone's going to win a lawsuit if they do that against Elon, but he definitely fried a bunch of shorts, and I think it was done intentionally. Can anyone still respond in the comment section if you can still hear me, if I'm doing this right? I really don't think this is going to be a clean short video. Let me put it that way. Okay, Tom. So you can hear me. You can hear me on this. Okay, Tom Edward 666 Sigma Robert Bazerat. Is the audio lagging, or can you actually hear me like while I'm speaking? Because literally I'm a technology idiot. So I had to play around with this. I tried to do this a couple hours ago. And I was trying to do it with video, and I was like, no, I just want to do audio, man. I just came home from the gym. I'm freaking tired. Okay, cool. So you guys can hear me. I can answer a few questions temporarily, but the main point I just wanted to get is the amount of pervasive accounting fraud. And it's not just Tesla Motors, guys. And the lawyers, they have the asses covered of these publicly traded companies that they can basically legally get away with accounting fraud now. So if you're on the short side of a company. You do your research, you read the financials, you know, I don't know, maybe you visit a factory or you've done your homework on this. And I've listened to the arguments for the shorts, and a lot of them for Tesla Motors, and a lot of them make a ton of sense. A ton of sense. But we're in a new normal environment now where companies can get away with epic amounts of fraud. And I don't want to single out Elon Musk and Tesla Motors too much because, you know, Amazon is getting away with it. There's tons of large cap technology stocks. The worst culprits, guys, are the large cap technology stocks with the highest valuations. It's insane the amount of basically accounting fraud that people can get away with now. No one's going to go to prison. The lawyers have their asses covered for the most part. This is the new freaking normal. So if you're shorting, I understand the logic for why you're shorting some of these stocks, but I would not be shorting these stocks. I have friends who are, and, you know, they've laid out the argument for why they're shorting these stocks, and I wouldn't touch them. Because you know why? The new business model for pretty much, whether it's all the levels of government in the United States or a lot of different levels of business, many different industries, it's Fraud Inc. And I've said this many times before, that the United States, we don't really have the rule of law here. We have there's not a functioning justice system here. There's not. So if you're a short seller of Tesla Motors and, you know, you laid out I've interviewed Mark Spiegel. I interviewed him a little over a year ago, maybe about a year and a half ago. Did you guys listen to the Mark Spiegel interview I did? Guy's really smart. He just screwed up on the timing real bad. He actually admitted, the funny thing is, he actually admitted that he should have been long that stock. Should have been long the fraud. Shouldn't have shorted it. He was like, well, in hindsight, I should never have shorted it. He was like, I should have just been long the fraud. Yeah, I mean, the stuff that Enron got away with, like, a lot of it's, like, basically legal now, legal covered with the lawyers. So it's gonna continue until it doesn't anymore. I don't know when anything's gonna crash at this point. I mean, if they can change the rules and do currency swaps, and a lot of the large companies can get away with basically legalized accounting fraud now, it's gonna be really, really tough to short stocks. I know there's some people trying to do it. Occasionally, if you get like a small cap company that's on exchange or mid cap, they don't have the resources. What I've looked at for some, I haven't shorted anything yet, but there's one of the best ways to tell if a company's in trouble, besides a bad balance sheet with too much debt or things like that, or if it's a fad stock like GoPro, they don't have any intellectual property, any patents to protect themselves from more competition, their margins are going to get eroded. One of the best ways on the financial statements with the balance sheet to check to see if a company is really in trouble is their margins are being eroded, especially the net profit margins. So you have a company, and I was talking about this in November. I was telling some hedge fund people about this. I'm sure some of them started shorting this back in November, didn't give me any credit for it. I didn't short it myself, but I was looking at MoneyGram. So they're the competitor to Western Union. And MoneyGram, if you look at the financials and the stock price of MoneyGram, it's a mess. MoneyGram had, the last time I looked at it, was around a $700 million market cap, but the stock price used to be way higher. About 10, 15 years ago, they used to have a dividend, and you could just tell basically that the revenues for MoneyGram have been flat for a long time. Perfect, Scotty. Yeah, I mean, a lot of Tesla's like a religion for a lot of people. It is. It's like basically a religion for a lot of people. So what scares me, Scotty, is that there's a lot of libertarians out there who love Elon Musk. And, you know, they don't want to hear any of the stuff that I brought up in this short little live video, streamcast. They don't want to hear any of it. Well, no one's talking about this also. Let's say that Tesla is actually successful with their ramp up, right? Let's say that Tesla is actually successful ramping up their production line. Number one, they're probably going to destroy their margins. And number two, once they get up to that higher production levels on their lower margin car, what's going to happen then? And this happens with almost every car company, almost every major factory or manufacturer. You can go back through many years of financial statements, is the maintenance capex. So if Tesla is successful ramping up their manufacturing, they're going to be looking at like billions of dollars a year in maintenance capex, and that's going to, any profit margins they had is going to be destroyed. Well, the funny thing, Scotty, is that a lot of people that are long Tesla don't even look at the financials. They don't. It's all the stock price. I believe in Elon. I believe in SpaceX. They don't bring up how Solar City, I haven't heard a lot of people talk about this. I've been the only one talking about this for Solar City. He did it to save his cousins. Okay, his cousins were in financial trouble, probably potentially jail time or something. There was a lot of problems with Solar City. There was a lot of problems that were, a lot of promises that were not going to be kept with Solar City. And so I think with Elon, there was family pressure to bail out Solar City. And, he did it. He did it with, I would have had no problem with Elon if he would use his own money to bail out his cousins with Solar City, because, it's good to protect your family and take care of your own, but he used like billions of dollars in shareholder money on Solar City. And then he sold us this BS line about all the synergy there's going to be. Yeah, I'm not saying the cars are garbage, but in like 3 or 4 years already, there's starting to be more competition for Tesla. There's a lot more competition. There's a lot more competition, and so I don't know Tesla's specific sector that much and all the different models that are coming, but I do know capitalism. And what normally happens in capitalism is, as a general rule, the more competition, the more margins are destroyed. Unless you have what Warren Buffett says, a really large moat, you have some type of maybe intellectual property on your margins and your profits. If you do not have that, then your moat, your profit margins, your competitive advantage. Tesla did have a competitive advantage. They had some really nice electric vehicles. He saw that there was a nice niche for a high quality one. I actually think he should have stuck with the Roadster. He should have stuck with the really high end, $80,000 or more expensive luxury electric vehicle for those hypocrite Silicon Valley guys that, can afford it. So they have like their gasoline cars in their garage. They have their Ferraris or their Lamborghinis or their other expensive cars in their garage. And then they have their expensive Tesla electric vehicle, their Roadster, which is faster and more torque. Who do I think would buy Tesla? Well, I think there would be a lot of companies interested in buying Tesla. The problem is the valuation. The valuation for Tesla is way too high. Supposedly the rumors that are, I didn't talk about this earlier in the video. So the investment bankers who are covering Tesla and maybe potentially going to do a capital raise for Tesla, they said they haven't heard any rumors of anyone willing to pay $420 a share. So that just adds to my argument that he put that own rumor himself in the market, Elon Musk did, and he's pumping the shit out of the stock price yesterday to drive it up to squeeze the shorts and get them to cover. So I think there would be buyers for Tesla, but he's way overpromised and the valuation on Tesla is too high, and he's also taken on too much debt. So either the balance sheet for Tesla would have to be cleaned up, the valuation would have to fall by more than half for another purchaser to be interested. I don't think SoftBank or a Chinese company or any of these other acquirers would be interested in Tesla at anywhere near the current valuations. Well, test the out. The funny thing about Tesla is, hasn't he been promising big profits, free cash flow in Q3 and Q4? So yeah, if you're right and Q3 is bad, it's going to make him look even worse. But the people who are pro Tesla, who think that Elon could do no wrong, they're just going to spin it some other way and say, well, it was someone else's fault. Give me Shelter 50. Yeah, I think Tesla should be trying to improve their cars more, because if you look at the new electric vehicles that are coming out, the other regular car companies have really stepped up their game. And the argument for the shorts, and I think it's logical, they just screwed up on the timing part of the trade for Tesla, was that once these other car companies have out I think Mercedes-Benz has maybe 8 different types of electric vehicles coming out, and BMW has at least 6. And so these are going to be really high quality SUVs and luxury sedans. And Porsche it was called the Mission E, but it's going to be called something else. And so these really high quality electric vehicles, even if a lot of them are not successful, they're going to really, really hurt Tesla's margins. And Tesla's not profitable anyway, being first mover advantage. So, but it's going to hurt their gross margins probably even more. Yeah, I really like the Porsche. I forgot what the new name of the model is. It was called the Mission E until about a month ago. They changed the name. Yeah, that thing looks really good. Goes 0 to 60 in a quick amount of time. A lot of horsepower. It looks great. Well, I think Elon got carried away because there was a market niche. He could have built a multi-billion-dollar high-end luxury electric vehicle company, and it could have been very profitable if he would have not overpromised. And so a Tesla in every driveway trying to save the world, be like Henry Ford, it's just not going to work. And also it would overload the electric grid now. And, also that subsidy, that $7,500 subsidy, there's a lot of libertarians that don't want to discuss that one. The libertarians I've spoken to about the $7,500 subsidy, they just kind of changed the topic. No, I think the name's good, and I think there is some value there, but he's way overpromised, so I don't know. The valuation before there's a buyout, the valuation would have to go down a lot. Maybe it has to go through bankruptcy. There's some issues there with China, so there's a lot of Tesla shorts who think that factory in China, where it might be an attempt to save money, that it's not even, there's no progress on it. I don't know. I'll wrap this thing up here in a couple of minutes, so I'll check through some of your guys' questions here, but it's just insane. I mean, I've dealt, like I said, with a good amount of publicly traded CEOs, on and off the record, some of them, conversations, building up relationships. I've been at conferences. I've seen some of these CEOs drunk, and they still won't say anything even close to what Elon Musk said about their own stock price. They are very, very careful. And so for him to do that, there's motive, there's serious motive behind it. And I think, in my humble opinion, I think it was to pump up the stock price as much as possible for either a capital raise in the near future or to just fry the shorts. And so if I was a short, man, I'd be really pissed. I mean, shorts have not done well. They briefly do once in a while well in that stock, and then the buys just come in. But there's a lot of people who buy Tesla based on no fundamentals. The SEC may fine him, but I think it'll just be a slap on the wrist. I don't think it'll be anything serious. There were rumors a while ago that Elon was going to be replaced as CEO and just move to chairman. So that may happen anyway. I'm not really sure. But there has been a lot of upper management that have left Tesla, and that has been dicey. I think that's a red flag. Excuse me. If it does hit 420, Garrett Hall, if it does hit 420, is it a good time to short in case the deal doesn't? Okay, so I don't want to give financial advice. My opinion, I think the way I would play it, because there's so much accounting fraud, legal accounting fraud, unfortunately, that the lawyers are allowing, and also like people who inherently believe in the stock, one of the best ways might be to treat it with a long straddle, with a put and a call. You really have to hedge yourself. And this is something that a lot of the shorts did not do. They did not talking with some of the shorts, they did not have upside protection. So I think one of the best ways, if you're a hedge fund manager or you're a professional trader, in case you're wrong about a stock or there's like enormous amounts of accounting fraud or other games, there's other games companies can play. I don't want to get too much into it, but I have a theory that there's one large technology company and they basically either have like a special purpose vehicle in the Caribbean or they have a couple hedge funds out there that they routinely give money to, and every time the stock price is about to break support levels, they just pay these entities to come in. And I was watching the stock chart of one of these tech companies for years ago, like 3 or 4 years, and I was looking at the chart. Every time it almost went below support levels, it just magically bounced right off of it, and I was in shock because I've never seen stock prices like that without, like a clear manipulated market like in gold and silver where they're just smashed. Except this was the opposite. This was, instead of it getting smashed, it was automatically like immediately bouncing off support levels, which a lot of companies and stock charts just don't do. I think a lot of shorts are already covering. I think a lot of shorts are. David Einhorn, did you see the story on David Einhorn in the last week or two? David Einhorn was making a pretty good amount of money, although he was obviously not he was not outperforming the manipulated, in my opinion, manipulated general stock market indices with the passive investing. So Einhorn's one of the true brilliant guys, but Einhorn's gotten a lot of his shorts wrong the last couple years, Green Mountain Coffee Roasters and others, and at least part of the reasons he's gotten these shorts wrong is because he underestimates the amount of accounting fraud and how much the corporations can get away with. I'm just doing a live stream. There's no video, Alan. Sorry. I'm just trying this out for one time, and we're seeing how it goes. There's no video right now. Sorry. It's just a schmuck talking behind a microphone. Yeah, so I think shorting with a lot of companies is really, really tough and really, really dangerous. It's a lot harder than it used to be now because of the amount. No. I already disclosed at the beginning of the live stream. I've not short Tesla. I've never been short Tesla. I only have hedge fund manager friends who are short Tesla. I'm not involved in that. I'm merely stating my opinion, mostly on what the tweet that Elon Musk sent out yesterday, based on my experiences as running this channel and trying to build a financial education company and speaking with CEOs of publicly traded companies in different industries. That the behavior Elon did yesterday with putting an exact stock price is very, very unusual. In fact, I wouldn't be surprised if he got like all caps emails from Tesla Motors lawyers about 5 minutes later. It's not on iTunes anymore because honestly, at this point, my YouTube views are down so much. I'm not even sure if it's worth doing any more free YouTube videos. I don't even make back my audio editing costs now. The YouTube censorship is so bad, and my total views per video are down. My growth on my channel is down. Advertisers are basically telling me to go screw myself. The ones I've reached out to, they're like, "Oh, you're not a big channel," and blah blah blah. So I'm not really sure if in a month or two if I'm gonna have too much free content. It might only have to be like one a week or a couple a month. You can blame YouTube. YouTube has destroyed anyone's ability to make any type. Look, if there was no censorship at all with YouTube, I would easily be making a couple $1,000 a month, and I wouldn't have to charge you guys for the content. I'd be making a couple $1,000 a month from Google AdWords revenues, and I'm not making anything close to that. It just, it's on. You can support me on Patreon, or you can send me a one-time payment on PayPal. My Patreon link is in the info section of a lot of my other videos. YouTube's taken all my revenues down since 2016. My revenues are down like more than 90%. Yeah, exactly, Tom. Well, I don't know if they don't care. They're targeting libertarians. They're targeting pro-Trump people. They're targeting anyone who's a regular Republican or conservative, you can keep your channel for the most part, but now you're going to get a lot less views per video. Guys, when my channel was a lot smaller in 2016, I was getting over 5,000 views per video. My channel was growing at 1,000 new subscribers a month. I wasn't spending a dime on advertising. I was getting a lot of people coming and finding all my archived interviews. So with the residuals from the people viewing my older interviews and finding my content that way in search, I was getting up to like 350,000 views per month in 2015 and 16. I was growing really, really rapidly. I would be over 50,000 subscribers now, and I'd be way over 5 million views. And, everything's down. Way, way, way across the board. Not on Steemit. Not on Steemit. I should go on Steemit. I should earn a little bit of crypto. My friends who are on Steemit, like X22 and SGT Report, from what I've heard, you can make a couple bucks extra on Steemit per video, but that's about it. So you have to have realistic expectations. So some YouTube channels out there, guys, a couple years ago were easily making $100,000 or more on Google AdWords revenues, and YouTube, without warning, took it down to almost zero. So imagine that, you had this business planned out and you had this growth, and, your family had a comfortable lifestyle, and YouTube, without warning, just takes it down to zero. And so that's the state of a lot of content creators. It's really sad. Put my stuff on Seeking Alpha. Yeah, I used to put my stuff on Seeking Alpha. That's a good idea. I have a Patreon. Who said that? PGD Tour. You need a Patreon. I have a Patreon. I have around 60 contributors, but I've also had a dozen people or more cancel in the last month or two. SPY right now and how it may affect Tesla. Okay, I'll answer a couple more questions, guys, and then I'm gonna call it a night. This was hopefully you guys think this was okay. This is my first time ever trying it. I did like a 20-second audio test recording before I turned this live, so hopefully it's not too bad. Mr. Spooner, did you listen to anything I just said? I said I have never shorted Tesla. Listening comprehension, bro, Mr. Spooner. Listening comprehension. I said I never shorted Tesla. No, I did not, Mr. Spooner. I actually don't short any stocks. And I already said why I don't short stocks. And that's because a lot of them, there's blatant accounting fraud that they get away with. And Tesla is just one of many hundreds of companies. It's really sad that we've come to this. And you know what? The regulators wouldn't have to do too much. All they would have to do to fix things would just be to send one or two large companies or executives to jail, and that would send a message. And the rest of them, I think, would basically say, you know what? Maybe we shouldn't commit accounting fraud. My buddy Larry, no more 5 girlfriends. No more 5 girlfriends. Can't take a vacation every 2 weeks. Can't go on his yacht. Inverse ETFs. The leveraged ETFs are dangerous. Stay away from those. The leveraged ETFs are designed to fail. So are the VIX ETFs. Possible market top. Well, I've said this for over a year now, maybe 2 years, that if we do have stock markets or currency failures in emerging markets, that actually it would be like a 1929 scenario. Do you remember that from financial history? That there was a blow-off top in October 1929? So things could get actually... It's similar to what Martin Armstrong said and similar to what Ludwig von Mises said with the crack-up boom. So if an emerging market failed, or if like the European banks failed, or I don't know, if things in China got worse, maybe they've done a 10% devaluation of the RMB since April, but maybe they decided, they just said screw it, and they just did like a 20 or 30% devaluation in a short amount of time. There would be like hundreds of billions of dollars, maybe more, in extra flight capital that would rush into the US for temporary safety, into the dollar, into treasury markets, and into the large cap general US stocks. So that would be like an October 1929 scenario, where how prior to the October 1929 crash, things were soaring for the last couple months. We may get that. Okay, I really suck at this and reading. There's all these comments here. I'm going to answer a couple more and then I'm going to go. I was only planning on doing like 20 minutes, guys, but I didn't know I'd have this many friends message me. Maybe I should do more of this from now on. No, stock market tops. Okay, testy out. We are in an environment now where the politicians, the central bankers, the regulators can change the rules anytime they want. So if we do have a stock market crash, what's going to stop them from only allowing it from 6 to 12 months, changing the rules, maybe doing like some type of one-off currency devaluation? You know, I've said this for many, many years, that eventually they will try everything and things will head back to like almost exactly what FDR did in 1934. I hope I'm wrong about that, because I really don't want to see the dollar devalued like, I don't know, 30, 40% very shortly, close the banks down. I really don't want to see that, but you know, I think history will somewhat repeat itself, because the Keynesians in power, they'll pretty much do everything. They're going to end up doing anything, whatever it takes, and that's like the last thing they're saving. That's like the financial nuclear option, is devalue against gold. Okay, so Kevin, the way I learned from shorting, I haven't actually done any shorting, but I've been learning about it from like Bill Fleckenstein and Kevin Duffy of Bearing Asset Management and Porter Stansberry. They look for fad stocks like GoPro, where they don't try and short something all the way up. They wait till maybe there's like a 10% or 20% correction in a stock like that, and there's a fad. So it's not an immensely profitable business with earnings growth and free cash flow and a moat with like intellectual property and patents and margins and things like that. There's not that. So that would be a fad. Obsolete technology like Kodak is another. You look for an obsolete technology. The other one's bad balance sheet. So if a company has a really, really bad balance sheet with too much debt, and you can tell that revenues are falling or flat, but their debt is blowing out like crazy. You know, McDonald's stock is not an ideal short yet, but they're going to have some problems at some point because their revenues are falling and they've done an incredible amount of financial engineering. My friend Michael Leibowitz, I think like at the end of last year or early this year, he wrote an article about McDonald's, and they've grown debt on their balance sheet by like 200%. So at some point, McDonald's will pay for that financial engineering. I mean, a lot of people said that General Electric would never have problems like they're having now. So there was a ton of people out there that said you can't short GE. They have the largest market cap. They have all the connections in government. They can, finagle their way through lobbying and expensive corporate lawyers and expensive tax accountants to never paying any taxes. They're never going to have problems financially. Wynn Casino? No, the Vegas casinos have been having. This is from my friends in Las Vegas who live there, who moved there, and from what they said, like a lot of the gambling revenue is down, but a lot of people now just go to Vegas for like to go to nightclubs and drink and party and to go to shows and shopping and eat. So the revenues have changed. The revenue mix in Vegas has changed. It's not a gambling only area. So the casinos are more diversified. Like when I was a kid and a teenager, my grandpa was actually a really good craps player. And so we used to go from Southern California to Las Vegas. He'd fly into Southern California and we'd go to Vegas once a month, and he would get tons of things comped because he played a ton of craps and he was kind of a high roller, at least for a while. And you used to be able to get really good deals on really quality food on the Las Vegas Strip back then. But nowadays, like from what I've heard on the food prices on the Las Vegas Strip, it's freaking insane. Like they've taken out, from what I hear, the Las Vegas casinos, they've taken out the coffee makers out of the rooms. So you have to go down to the coffee shop in the casino, and then you're paying like $15-20 for coffee. It's just gotten ridiculous. So, I mean, people, as long as they can go on vacation, some people spend all their discretionary income. So as long as they have some money coming in, they're not going to save it. Unfortunately, that's the new normal now for a lot of Americans, especially younger ones, my generation, millennials, or whatever the younger version of millennials is. So I don't know if the casinos are as good an indicator as they used to be. I would say for indicators for companies, I would look at casual dining restaurants. So I live in Fairfax County, which is one of the 5 largest median family incomes, and I drive around quite a bit for errands and, when I go to the gym, and drive around with my friend on the weekends to check out some restaurants and stuff. And from what I see at the restaurants, there's a ton of middle-class casual dining restaurants, and normal dinner hours Friday night, and even some of them on Saturday, they are totally empty. Biggest macro short. I'd have to, I'm not really, this is off the cuff, man. I'd have to think about that for a second. I really do not like the restaurants, the casual dining restaurants. I think some of them are way overvalued. I think the casual dining restaurants, I think the consumer is going to get really, really hit. I think there's evidence that there's a good amount of stagflation now, and a lot more stagflation is coming. So stagflation would hurt discretionary income for people for going out for food. Maybe like BJ's restaurants, the pizza and beer place. The one I've eaten at locally, there's some huge problems with their menu. They have way too much inventory on their menu. I haven't looked at the balance sheet though, but I can tell you operationally what they're doing. Energy and biotech. Well, the oil market or uranium, because uranium's still one of the most undervalued trades. If you can wait a couple years more, your Camecos, your Arevas, you're probably going to double your money on Camecos and Arevas. Those are the least risky uranium plays for Cameco and Areva, excuse me, the French one. Well, renewables aren't really economic without subsidies, and renewables don't really make economic sense unless oil's close to $100 a barrel or higher. And we're in a scenario, I think, where oil at $100 a barrel or higher could potentially crash the global economy again. Oh man, off the top, I don't recognize the stock symbols off the top of my head. Yeah, renewables are very boom and bust. So I went to a DC renewable conference when the oil price was over $100 a barrel, and the CEOs were getting drunk. One of them was having an affair at the conference. It was kind of ridiculous. Like, it was really obvious. Because he left, like, right after he spoke, he left with his, like, they were, like, making out. It was... And anyways, though, the CEOs of the renewables, when oil was over 100, they were really cocky and really full of themselves. One of them told me that he freaking hated investment bankers and that they were going to put all the oil companies out of business. and then within like 3 years, a good amount of those renewable companies that presented at the DC Renewables conference, like almost all of them were bankrupt. Vinod Khosla, smart guy. I've spoken in emails with Vinod Khosla. He didn't want to come on a podcast. And he wasted many billions of dollars trying to get renewables to work. But they're just not, even with the tax credits and the subsidies and all that stuff, a lot of that tech is just not economic unless oil stays above a certain price. the main reason that the U.S. regulators have denied Bitcoin ETFs so far is that the majority of trading volume is in Asia. And they're from speaking with an executive at a pretty large Bitcoin mining operation. There was an enormous amount of Bitcoin market manipulation in Asia. There was actually, so in the US, you'd go to prison for this. There was wash trading. So we're you and me, we have scam going. This is hypothetical. I've never done this. But, with wash trading, if you look up the definition, it's where you work with like a partner and there's back and forth trading bid and ask to drive up the price. And it's not a real market. You're just moving the price higher and painting the tape. And apparently from someone who's deep inside the Bitcoin mining industry, that he said that during the big Bitcoin run-ups, from 2017 to like basically January of 2018, there was an enormous amount of illegal wash trading on the Asian exchanges, cryptocurrency, and that no one is going to go to prison for it, or at least very few people. Cobalt market. Well, I don't think there's a lot of supply for cobalt outside of the Democratic Republic of Congo. That's some irony right there, the DRC. Okay, guys, well, we're way over the time limit here. We're way over the time limit. We're 45 minutes. I didn't plan on doing this long, but there's so many questions coming in. So if you answer some of the questions maybe after this video is finalized, if you put some of them down there later, maybe I'll answer some of them. I'll talk to y'all tomorrow. I have an interview with Louis Camarsano of Small Gold, so we're going to get an update on more realistic gold and silver market analysis tomorrow and China tomorrow. But that's it for right now. If you guys like this, I may do another one, maybe one a month or something like that. We'll see. But yeah, I really don't know how much more free content I could do because I'm not even making my my audio editing budget now. So that's how fucked up YouTube is. Sorry I dropped the F-bomb there, but I'm really, really pissed and really, really angry. I should easily be making a couple $1,000s a month, providing you guys content, building out my business, and YouTube's made that impossible.